All right, folks, how you doing? Kanal here, Bulls on Wall Street. Hope everybody had a wonderful weekend. A nice week for the markets overall. The S&P closing up nearly 2%. The Dow Jones up 3%. Really a lot of bullish things played out last week. And the best case scenario that we were looking for in the markets definitely played out. One of the things that we kind of had on the line really was we had two levels of resistance that we were watching, with the 50-day moving average acting as resistance, and then also we had on a shorter term time frame, more of an inverse head and shoulders pattern developing on the 30-minute chart on the S&P. And so once we broke over that, that kind of confirmed the move and the bottoming process that we had been looking at. And so now all of a sudden, all things look like they're a go. We did spend a few days here consolidating, in this 1680, 1690 area. And so that'll be something that we need to watch here, is to really kind of come out of this range with some gusto. It is very common, right? You could see after we really bottomed down the 1620s, we didn't have any rest. And so to spend a few days consolidating is pretty healthy. And so if we can come out of that zone, that kind of puts us square back into the range, that S&P 1700 range. And so that's something that we'll keep an eye on as our next level of resistance if we can come out of it. But otherwise, there's not much else that could be said. The market acted really well. Stocks were breaking out all over the place, and we had really a lot of stocks that were on the watch list that played out the way they needed to. And so that's what you want to see, is right. You want to see positive action in your watch list, because that tells you at least that you're looking in the right spot and that the market is cooperating in the manner that it needs to for you to make money. Let's take a look at the Russell 2000. Russell also broke out over the 50-day moving average. Looks like we're flagging here, and it looks a test of the 52-week highs is right in the cards. One of the clues that we were looking for last week was that with the NASDAQ holding up really better than any of the other indices, and it was in breakout territory, that if it can break out to new highs, then that will give us some of the confirmation we need to have the other indices bottom and start to make a move too. And so the NASDAQ was the first one that made that powerful move. And once it got to new highs, it was off to the races for the rest of the indices, and people started gobbling up stocks. Home builders, a nice week last week. I was a little bit... I was a little bit bearish on the home builders just because, we had kind of been testing this 28 level, and there was quite a bit of resistance above it last week, but we kind of cleared multiple levels of resistance here. And so home builders look a lot better now than they did, a week ago. And so we have this kind of pattern that we've been in. So we broke above it. So if we can consolidate over here, that might give us enough to make a push back above, and so that could put some of these bad boys into play. So this will be a development that we're watching, as we've really been in a short-term downtrend for the last couple months, and any move like this has to be respected. Emerging markets, really a nice couple weeks for the emerging markets. We snack right back into that 200-day moving average, so there's going to be a little bit of resistance in this zone. I do anticipate some type of pullback over here as we're just really extended. The Chinese markets, really a lot of Chinese stocks have been rolling and really acting well. The Sinas and Sohus and Yokus and all those bad boys have been breaking out. This is a sector really to keep an eye on. Overall, the Chinese market's really been just acting like crap for the last few years as we just steadily been grinding down. But even the last 2 years, right, we've just been in a range. So any attack of this 41 level, that could really bring in some buying and stuff like that. And so we had a really nice bullish move here, and it doesn't look like anything is going to slow it down right now, as we had a few-day pullback to work off that overbought condition. And so right if this dip gets bought, we're going to see another break of its previous highs and maybe a run to the 41. So keep a list of Chinese stocks on your watch list. They've been acting pretty well, and they've been really making a move. USO, oil, right? Oil's made a nice little run here. You know, we've kind of come, you know, we broke out of this longer term pattern that we had been in for a few years, and so now we're starting to consolidate above here. With all the stuff that's going on with the Syria and all that stuff, you know, oil's made a really huge monster move, but now some of that stuff looks like it's kind of getting priced in, and so we're consolidating around here. So really any news that, you know, things are settling down could send oil dropping back down, but on a technical basis, you know, if it can hold this kind of 38 zone, right, we have, you know, we had the potential for higher prices in absence of news. Gold, totally just whacked last week. You know, broke below the 20-day, the 50-day moving average. You know, I hate trading gold, but there's really just nothing redeeming about this chart right now, and it's definitely, besides it being oversold, there's just not a play in there that is going to be low risk, high probability. Now, silver on the other hand also got whacked, but at least it came back to a level of support where we might get a bounce here. You know, this has been a pretty steep pullback from, you know, nearly 24. So we might get a bounce here, and you definitely see some support levels underneath that can hold it up. So, you know, that kind of at least lowers your risk, but I don't see necessarily anything that's just going to be an easy trade on this right now. But you can at least manage your risk here as you've got, you know, some level of support. So that's it for now, guys. You know, the markets are acting well, and so my aggression is back on. We are short-term overbought, you know, as we saw in the S&P and stuff like that. So we do need to chill for a hot second, but we've bottomed out at least short-term, and so, you know, we can throw a little bit of risk back on the table. Keep an eye on this UNG. This had a nice week last week, and it looks like we're kind of flagging above this 50-day moving average. We might see a run to 20 and then, you know, possibly another breakout. So that's it for now, guys. I will be up and ready with the watch list in a hot second. Take care.